Okay, here we go. So, the whole purpose of, these sessions are, of course, to make sure that you guys are number one, you're starting to feel a little bit more comfortable and confident in your new venture. Because for a lot of you, starting to learn how to trade is something brand new. And like, learning any new skill, it's obviously going to require some time. It's going to require some dedication and some consistency on your part. A lot of people join and they want to make money like yesterday, right? But, if you were going to pick up a guitar for the first time, you know that by tomorrow you're not going to be able to fully play the guitar, right? Like you know this, right? If you're going to learn a new language, you're not going to be fluent in French in a week. You know this, right? So you shouldn't be treating trading any differently. Okay. It requires time, it requires effort, it requires you, to study. So well done to those of you who are on this call, because we had a lot more new members than just 12 this week. So for those of you guys who are on here, you've taken the time out. So well done. Now, hopefully you have notepads and pens ready as well, because I would also expect whenever you get on one of these sessions, you're also taking notes. Okay. If you hear something once and then like tomorrow you're thinking back to everything I went through, it's impossible for your brain to retain all of that information. Okay. So definitely take notes. Now, on last week's call, okay, I do this call every week. On last week's call, I went through things like the types of trades we take. So the difference between market execution and pending orders. I went through actually how to take a trade on MetaTrader 5 and gave some examples. If you're brand new this week, okay, I'm going to show you at the end of the training where you can watch the recording of that. Okay, but I will also be going through that same training next week. Okay, so I do like 2-week rotation. Okay, so what we're going to go through tonight, I call it Trader's Toolkit, because just like let's say an electrician or a plumber or a contractor, right? They have the tools of their trade. Okay, tools that they use every day, tools that they use all the time. And when it comes to trading, we also have tools and things that we need to use regularly, and it needs to become habit. Okay, so this training is going to be like a 3-step checklist of what you should do at the beginning of every trading week. Okay, I would suggest doing this on Sunday night before the markets open. Okay, and it's also, Sundays is usually a pretty chill day if you're someone who doesn't, usually work on the weekends. So Sunday is a good time to just come on, go through your checklist, get yourself prepared for the trading week ahead. So the first thing that you're going to do on this checklist is check the economic news. Okay, so a website, and I'll drop it in the chat box as well. Okay, hold on, baby. Oh. All right, 1 second, guys. Let me drop that in the chat box. Okay. There we go. Okay. So that should be in the chat box. So you want to check the economic news. Now, this is probably the first time you guys are ever seeing something like this. So don't worry. I'm going to explain it. Okay. There's nothing crazy here. Okay. But what you guys may or may not know. Okay. This was something I didn't know because I'd never thought about it before. Right. But our currencies, US dollar, Canadian dollar, the pound, the euro, Japanese yen, etc. Our currencies are massively affected by things that happen in the news, right? Things that are happening in the economy. Okay, I guess maybe I knew that, but because I wasn't it wasn't affecting me, I never really thought about it. Okay, so major things like, let's say Donald Trump doing his inaugural speech, for example. Okay, that caused massive things to happen in our currencies, right? Especially the US dollar. But if something happens to the US dollar, it tends to have a knock-on effect to all other currencies. Right. So even though, you don't need to be like, being paying attention to the news and be some sort of like politics buff to be a good trader, but you do need to be aware that when there is major news coming, it can affect our trades because it affects the market. Okay, so this site, Forex Factory, there's lots of sites like it. I just find this one, quite user friendly. Okay, it actually, makes it super easy for you to identify what news is coming and how much it might impact. Okay, so you guys can see on the screen, you've got some yellow folders, you've got some orange folders, you've got red folders. Let's see if there's a gray one. There we go. There's a gray folder there too. I'll talk about that as well. Okay, so yellow and orange folders, you can ignore. Okay, you don't need to worry about those. It basically just means like moderate to low impact. Okay, so when that news comes out, it's very, very unlikely to affect your trade. However, as you could probably guess, these red folders indicate high impact news. Okay, now that is only going to be important for you as well as if you're trading that pair. So here you can see there's high impact news or was high impact news. Today's Tuesday, right? Yeah. This morning, EST. Now this will automatically adjust to your time zone. So for me, I'm in the EST time zone. Okay. So it's currently, 4:15 p.m. for me, right? But if I'm trading the Canadian dollar at 8:30 in the morning, I need to be super careful because there is high impact news on that particular currency pair. Now, for most of you as beginners, okay, especially, within the team that we have, gold is a very, very popular thing that we trade. Okay, so the Canadian dollar high impact news isn't really going to affect me. However, if there is high impact news on the US dollar, this is the one you really want to pay attention to. Okay, these red folders on the Japanese yen, not really going to impact you unless you're trading the Japanese yen. But the US dollar, if there is high impact news on the US dollar, it is likely to affect all pairs. Because whether we like it or not, the US currency is, the number one currency in the world. It's a universal currency. Okay, so you want to, at the beginning of the week, this will take you 2 minutes, right, to go onto Forex Factory on a Sunday night and just make a note in your calendar of where we have high impact news on the US dollar. Okay, so Wednesday, and this is actually a big one, the FOMC, economic projections. Okay, this is going to have an impact on our trades. Okay, so Wednesday at 2 p.m. my time, so that's like 6 p.m. UK time this week, or 7 p.m. if you're in Central Europe. Okay, there is big, big news happening. Okay, now you might be wondering, okay, well, what if there's news coming, right? What do I do? Okay, so I am going to tell you that, but first I just want to explain one more thing, okay, how it impacts. Okay, so see over here on the right-hand side, you've got percentages, you've got something with an M, right, for millions. Okay, you've got K down here for thousands, right? So this is the economic indicator for that particular bit of news. Okay, so if I'm look at the unemployment rate in Australia, okay, 4.1%. The projected is 4.1%. So if the percentage is lower than that, okay, that's going to be a good thing, right? Because it means the unemployment rate has gone down. So that's going to have a positive effect on the Australian dollar. Whereas if it was higher, well, then that's a bad thing, right? Because it means the unemployment rate has gone up, which would, of course, have a negative impact against the Australian dollar. Okay, so just so you're kind of wondering what some of these things are, and then we don't have the actual because we don't know what the result is. Okay, so this is why at 2 p.m., this is where we get the actual results. And that is going to cause the market to have a bit of volatility. Okay, so what do you do? Okay, that's the key question here, and you'll kind of get to understand news a little bit better. Okay, but what do you do if the news is coming? So if you're in a trade and your trade is in profit, okay, your trade is in profit, you can, number one, I'm going to give you two options. Number one, you could just close all trades with your profit. You could just not risk it, take your money and just wait until news is over before maybe you enter some more trades. Or if you're in enough profit that you would have made your percentage for the day, you would have hit your trading goals for the day, which I'm going to show you how to create a trading plan at the end of the call. Okay, then just close your trades. Don't get greedy. Close them. Be happy with your profits. Come back to the markets again the next day. That's the first option. The second option, and this is what I usually do, okay, I take partials. Okay, taking partials means I'm just closing part of my trade to secure profit. Okay, I never want to be in a position where I was in quite a bit of profit and then I end up losing a trade. Like that to me, that burns me. Okay, I am a very big fan of taking partials. And again, if you're not quite sure what that means or how to do it, I did cover that on last week's call. So remind me if I forget at the end to show you where to find that recording. Okay, so taking partials, I'm going to close half of my trade, but then I'm going to make sure before the news hits, I move my stop loss to break even. Okay, SL is stop loss, BE is break even. Okay, so that means I've bagged some of my profits. Okay, I've secured myself some profits, and now my stop loss is up to where I entered. So if news goes crazy and it throws my trade in the opposite direction, no problem. It's just going to take me out where I entered, and I haven't lost anything. Okay, so those are the two options if you're in profit. If you're currently in drawdown, okay, drawdown means your trade is in a loss. Okay, so if you took a buy and it started going downwards in a sell, okay, so your MetaTrader 5 is going to be in red. Okay, that's what drawdown means, but it hasn't hit your stop loss yet. Okay, if that is the case, you do nothing, right? Because the news is either going to come and just smack you out at your stop loss, or, right, maybe the news goes in your favor and it just, propels you to TP1, right? If that's the case, happy days. But when we enter a trade, there are only two outcomes. We are either going to win the trade or we are going to lose the trade. So whether or not there is news, that's always going to be the case, right? And the quicker you prepare yourself for that mentally, the easier this journey is going to be for you. Okay, so if you're in drawdown, you do nothing. Okay, so that is checklist number one. Okay, again, I would suggest doing this on a Sunday night. Check the news and put it in. It just depends what you prefer. If you actually have a physical calendar and that dictates your life, put it in your calendar. Or I would just set a little alert on my phone 30 minutes before news is about to hit, but only for the US dollar, because that's the most important to you. Okay. I personally as well, I usually actually check the news first thing in the morning before I take trades as well. Cause like sometimes, my memory's just not the greatest. It takes 30 seconds for you to have a look, see if there's any red folders. Okay, cool. Go about your day. Right? Any questions about the news before I move on to number two? Hopefully, I didn't just, scare you guys with all the economic talk, but, okay. I don't see anything in the chat box, so think we're all good. Okay. So the second thing you want to do, okay, is looking at your, trading account, and for that coming week, readjust your lot sizes. Now, what I mean by that is, based on your account size, right, you should know the lot size you're going to use, okay, the risk management for your current, account size for each of our educators or our scanners. What I mean by that is you should have an idea of how much you are going to risk per trade, okay, and the rough stop loss size of our scanners. And I'm going to go through that, okay, together on this call, because you guys aren't to know that yet, and that's fine. Okay. Or some of the trades that you're taking frequently. So for example, if you're taking some of Hugo's signals, right? Hugo sends us trade ideas in our group chat. Now, Hugo's stop losses are usually only like 20 pips. So if I know, okay, a signal is coming from Hugo and his stop losses are usually always 20 pips, you should know the lot size you are going to use for Hugo's trades. Okay, if you are using Golden Era, Golden Era stop loss is always 15 pips. So if you are just trading with Golden Era, you should know what your lot size is going to be for Golden Era. Okay, and I'm going to go through risk management now. Okay, so that makes a bit more sense. So let's go through, and I did go through this on last week's call, but I'm going to do it again because I think it's super, super important that you guys, just mentally, you understand how we win and lose money trading. Okay, and it is based on how much we're risking per pip. Okay, so down in the right-hand side, if you're not sure what a pip is, a pip just measures the movement of the market. So of course, if we're in a buy, meaning we're anticipating the trade, the market is going to go up, the more that market goes up and up and up and up and up, the more money, of course, we're going to make. But exactly how much we make is determined by how much we had risked per pip. So every time we take a trade, we decide how much we're risking. Okay, so this is called our lot size. Now on the left, you can see there's 3 different lot size types. There's micro lot, mini lot, standard lot. Okay, I'm not going to talk too much about mini lots and standard lots because if you have less than $1,000 or pounds or euros in your account, you shouldn't really be touching mini lots. Okay, because a mini lot, 0.10, you're risking $1 per pip. Okay, that would only need to move 10 pips and you would have, let's say, already lost $10, which is 1% of 1,000. Okay, you should only be risking 1 to 2% per trade. So if you've got less than 1,000 in your account, you shouldn't really be touching mini lots. Standard lots, you 100% should not be touching unless you've got like 10K plus in your account. Because a standard lot, one standard lot is $10 per pip. If that trade moves 10 pips in the wrong direction, you've already lost $100. Okay. And I mean, I think this is why a lot of people have a misconception that trading is super risky. It's because a lot of people don't understand that if you just like whack numbers in there, you put a stop loss, like, yes, you could end up losing a lot of money, right? But if you understand what you're doing, then you're not going to be risking too much. It's a calculated risk. Okay, so let's look at micro lots, and I'm going to ask for some participation here in the chat box. Right, so if I take a micro lot of 0.01, which is 10 cents per pip, that's how much I would be risking. Okay, 0.01 is 10 cents. 0.02 would be 20 cents. 0.03 would be 30 cents, so on and so forth, all the way up to 0.09, which is 90 cents. Okay, look at the first one. So if I took a 0.01 and it was a 35 pip stop loss, okay, so it hits my stop loss. How much money would I lose? And I've even put down how you would calculate it if you can't do this mentally and you need to use a calculator. So in a calculator, you'd put 0.10, which is 10 cents, times 35. Someone tell me, how much would I lose if this goes and hits my stop loss? Thank you very much, Sinead. Okay, so again, guys, hopefully you're writing this down. And if you weren't sure what the answer was, right, you need to kind of like now write it down, and we're going to practice it again next time. And I want someone new to give me an answer. Okay, so $3.50. Okay, which doesn't seem like a lot, but that is 1% of $350. So if you have, let's say, $350 or less in your trading account, then you shouldn't really be risking much more than a 0.01, because a 35 pip stop loss, right? Let's say golden era is only going to be a 15 pip one. So actually, let's do a golden era one. Golden era is always a 15 pip stop loss. I'm going to put GE for golden era. So in this case, how much would I lose? Somebody new tell me, because I know Sinead knows this. Somebody else. There's more of us on the call here. How much would I lose if this goes and hits stop loss? Thank you, Daniel. Perfect. 150. Okay, so now it's not so much. Okay, 150, that's 1%. Oh, geez. That's 1% of $150, right? And you know, quite a few people would have more than that in their account. But if you don't, then again, this shows you shouldn't be risking more than a 0.01. Oh my gosh. There we go. Okay. Now, let's do this one. Okay, just one more example because I just want you to see the difference between 0.01 and a 0.02. Exact same trade, let's say a 35 pip stop loss. Thank you, Daniel. Good. So it would be, let me actually, what was I just trying to do there? 20 times. I just wanted everybody to see still if we hadn't quite figured out the maths. But yeah, $7. Okay, good, $7. So before you enter a trade, when you enter a trade, you should know exactly how much you're going to lose, right? Because I don't have this written on here. I'm gonna put it in the chat box. Actually, no, do I have space? I don't really have space in there. I'm gonna put it in the chat box. There are two main rules to trading. Okay, these two. Number one, first and foremost, you are thinking of capital preservation. Before you take a trade, you should know exactly how much you're going to lose because you're always thinking about protecting your money. Okay? If you have $1,000 in your trading account and you don't have no idea, you've just randomly put a lot size, you don't know how big your stop loss is. Well, if you then go and lose $100 in that trade, you've just blown 10% of your account in one trade. That's crazy. Okay, you should always be thinking about protecting your account first. And then second is your capital growth. So once you've thought about protecting the account, now you can grow it because you've already made sure it's protected. Now we can go ahead and grow the account. And when we look at golden era in a second and trend wave in a second, we're going to talk about a good risk to reward. Okay, because if you have a good risk to reward, then your account is always going to grow. Okay, even if you're sticking to the rules of just risking 1 to 2% of your account per trade. A lot of people get greedy and think, well, let me just put my stop loss or my lot size up. I want to make more money. Let me just keep increasing the risk, right? If you lose the trade, you are going to be sorry. Okay, so drop a 1 if that makes some sense. If you understand that your lot size and how big the stop loss is going to determine how much you will win or lose in a trade. Okay. Perfect. We did go through that last week. So if you were on last week's call, hopefully that was just a bit of a reminder for you. Okay, but if you're new, I've only got 2 1s. Okay, 3. Does that mean it doesn't make sense for nobody else? Doesn't make sense for nobody else? Do I need to repeat anything? Okay, Daniel. Okay, perfect. Amazing. Okay, cool. So now that we've gone through that, okay, one question I get asked is, well, how do I know how big the stop loss is? Which is a very great question. Okay, so we're going to go through again here really quick, not again, but we're going to go through how to calculate pips. Now, this is going to take time for you to kind of, be able to calculate this mentally. Like I look at gold now, if I look at a gold trade, whether it's a signal or whether it's on trend wave or whatever the case may be, and like I instantly know, okay, that's that many pips on gold. I know exactly how, big the stop loss is. I know exactly how big the take profit is. Okay. Gold is also, I only trade gold and Bitcoin, right? So I should know. Okay. So I'm just going to go through and show you how to calculate because there's little rules for different instruments. Okay, so gold has its own little special rule. And then in the middle, I've got indices. So things like NAS 100, US 30, right? A lot of you, if you're trading with J, in his live sessions. He does a lot of US 30. But then also you've got our traditional currency pairs, which are calculated slightly differently as well. Okay, so let's start with gold. Okay, and this is just an example. Okay, this must have been a long time ago because gold's now hit 3,000, right? But that's okay. So let's say we were given a trade and we were told to buy gold. Our entry is 2023 and our stop loss is 2019. In the chat box, tell me, what is the difference between these two numbers? Like if I was to subtract 2019 from 2023, what am I left with? Little bit, see your guys, subtraction skills. What am I left with? 4. Excellent. Now, does that mean my stop loss is 4 pips? No. With gold, you subtract the numbers and add a 0. So that is a 40 pip stop loss. Okay, so you subtract and add a 0. Okay, I'm going to put that rule down here. Okay, so subtract. I didn't mean to put that in caps, but hey, and add 0. So same thing would go for the take profit, right? What is the difference between 29 and 23, right? If I were to minus that, what am I left with? Somebody tell me in the chat box. Quick mental maths. Okay, I'm left with 6, and then I add a 0, so that is a 60 pip take profit. Okay, now let's do in the other direction, a sell. Okay, same thing, but this time my entry is 2045. My stop loss is 2055. Okay, again, if I were to subtract 45 from 55, what am I left with? Good. And then I add a 0, meaning this is a 100 pip stop loss. Okay, that's a big stop loss. And the reason why I'm doing these big ones is because on some time frames of trend wave, there's some pretty big stop losses. Okay, now what about the take profit? Okay, we've got 2045. TP is 2030 because it's a sell. So what's the difference between 45 and 30? Somebody just tell me, what's the take profit? What's the take profit? I won't even do the difference bit. What's my TP? How many pips?
150.
There we go. Perfect. 150 pips. Francesca, you got it as well. Okay, cool. Okay, drop a 3 if that makes sense. Okay, makes sense with gold. You just subtract, add a 0. Subtract, add a 0. Oh, who's trying to call me? No. Okay, perfect. Now, let's go over to indices. Okay, now, all of our indices, let's say NASDAQ or Dow Jones, okay, are going to kind of look like this, right? So we might be told to buy at 39,000. Now, if you're on a live session with Jay, okay, he shows you this isn't going to be as much. He shows you on the screen what the stop loss would be, what the take profit would be, right? And usually he starts with a 1-to-1 risk to reward, meaning if he's looking for 70 pips, he's also, it could do like a 60 or 70 pip SL. Okay, so what you guys can always do as well, because I mean, I don't have a chance to get on his sessions every single day. You can also ask in the chat, how many pips is his SL? And that will help you, right, with your risk management. Okay, but let's say, right, and actually, maybe I should make this a bit smaller because he usually doesn't have, so it's a buy. Let's do this. And then, yeah, because his usually aren't that big. Okay. So let's say here, cool, cool. So yeah, that makes sense. Okay, sorry, I was checking my own maths there. Okay, so let's say we were told to buy, okay, at 39,000, and our stop loss was 38,500. Okay, what is the difference if I were to minus 38, more subtraction, 38,000 from, oh gosh, my brain, guys, 38,500 from 39,000? What am I left with? Okay, Daniel, 500. Now, that is not a 500 pip SL. Okay, indices is like the opposite of gold. Okay, you subtract, okay, then take away a zero. Exactly, Daniel. So it is 50 pips. Perfect. So the difference between these two, if I were to subtract, is 500. Okay, and then I just take away a zero. So it's a 50 pip SL. Okay, now with that same thing in mind, what is my stop? What is my, sorry, take profit? So this time, remember, I subtract, but then I take away a zero. Okay, so it's not 1,000 pips. Yes, Daniel, good. It would be 100 pips. Well done. Okay, again, guys, this stuff will, it seems a bit like, well, why would they make it different? Okay, but let's do one more example just to make sure we're getting it. Okay, now this time we've got a sell. Okay, it's 40,000. Our SL is 41,000. Well, hopefully you guys get that one because that one should be an easy one. How many pips is my stop loss?
100.
Yes, good. And actually, you're probably not very going to often have 100 pip stop loss, right? This was, for those of us who remember Plutos, those were insanely big stop losses, right? But let's do another example. Okay, sell is 40,000, take profit is 38,500. How many pips would my take profit be? Perfect, Daniel, 150. Awesome. Okay, so hopefully that's making some sense. Okay, hopefully that's making some sense. Now, let's go over to our traditional currency pairs. Now, I've put this as an example because if you go to Google and you type in Forex, how to calculate pips, you're going to get so many little examples. I would find one and maybe like wherever you're trading, if normally you're trading at your laptop because you're going to get your scanner up and you've got, maybe your trading plan and everything set out, right? I would print this and just have it stuck somewhere. Okay, these are for our traditional Forex pairs, but I think with gold and with the indices, for me, those are just easy to do. But once you start throwing in a decimal and it's got loads of numbers past the decimal, even me, like I have to like really think if I'm trading a currency pair. I don't do it very often. I can't remember the last time I traded an actual currency pair, but nevertheless, okay, here's an example of Euro USD. Okay, we were told to buy and the price was 1.24683. Okay, now you are paying attention to, see here, okay, where the 6 in blue says 10 pips. Okay, so what you're going to do, if we look at the third number, okay, in our price here, and we look at the third number in the stop loss, okay, if I minus those two numbers, what am I left with? What's 6 minus 2? Basically. What's 6 minus 2? Okay, good,
4.
Daniel. So it's 4, but it's a 10 pip, so it's a 40 pip stop loss. Okay, so with Forex pairs, you're looking at the 10 pip number. Okay, you're minusing it, okay, which would be 4. And then we, of course, add a 0, though, because it's 40 pip. Sorry, it's a 10 pip, if that makes sense. Right, so let's do the same with TP1. Okay, TP1, it says 0, which, is 10, basically, right? Let me highlight that. So 6 and 0, what would be my TP? No, not 100. What's six? If that was 10, right?
60.
Yes. Yeah. See, even do you know what? I have to think about that. I hate currency pairs. I hate them. Okay. So you guys just need to print this out, okay? Gold is my specialty. Okay. Now, all of this being said, okay, the reason why we do this again is because when you enter a trade, okay, like let's say this trade, for example, that I've given on gold, right? The stop loss is 40 pips. The take profit is 60 pips, right? Meaning this has like a 1 to 1.5 risk to reward. Okay. You kind of always want to have it either a 1 to 1, 1 to 2, or 1 to 3. Okay. 1 to 1 should be the like minimum, right? You don't really want to be taking too many trades. If it hits stop loss, you're going to, lose more than if it were to hit your take profit. Okay, so that being said, let's just quickly go over to golden era and to trend wave just so we can test this out now. Because when you guys, the quicker you can become independent on these scanners, the better life is going to be for you because you are then in full control of your own trading. Okay, so let me come over to golden era. Golden era is a great one for your risk management because it's the same every time. Okay, so this one's not actually, this is a trade that's cooking up. It is cooking up. Okay, but let me just, okay, this one's already cooked. Okay, so, right, this is a sell. How do I know this is a sell? Well, because my target points are below my entry, right? I need to click the sell button because I want the market to come down to hit my take profit. Okay, if it were a buy, then my target points would be above my entry because I need price to come up to hit it in order for me to make profit. Okay, so golden era doesn't tell you if it's a buy or a sell. So you just need to know that information for yourself. So again, if you're new, maybe write that down. So if your target is below entry, it's a sell. If your target is above entry, it's a buy. Okay. Same goes, you could put it for your stop loss. This stop loss is above the entry. Okay. I know it's a sell because if this buys up, it's going to take me out in a loss. Right. Now, let's look at this. This entry is 3,034.5. Okay. We're throwing a decimal in there. And the exit is 3,033. How many pips is this stop loss? I actually already told you guys earlier that golden era always has the same stop loss. But let's see if you guys can put to the test what we've just learned. How many pips is this stop loss? Remember, you minus and you add a 0. Well, this one's a bit different because it's got a decimal. That might throw you guys off a bit. Yes, Sinead, good. It's 15. Right? It's 15. Now, how do I know this? Well, 3034 and 3033, it's a difference of 1, right? So if there was no decimal after that, that would be 10 pips. But because it's a 0.5, then it's 15 pips. If that was 0.6, it would be, oh, you cheated at me. You read your notes. Sinead. But hopefully that makes sense though, guys, right? If we were to minus that, we'd be left with 1. Okay, which would be a 10 pip stop loss, but because the 0.5 is in there, we just add the 5, so it's 15. Okay, meaning, actually, sorry, that's the take profit. Okay, but the stop loss is the same thing because it's 3.36. Okay, if I were to minus 3.6 and 3.5 is 10, yeah, 15. So that one you just kind of minus there. Okay. Now, what about take profit 2? How many pips is TP2? You've got 3034.5, 3031.5. And I'll give you another hint. It's a 1 to 2 risk to reward. There you go, Sinead, 30. If I were you guys, I would put that in my notes. Golden era, always a 15 pip stop loss. TP1, always a 15 pip TP. Okay, meaning it is a 1-to-1 risk to reward if you just take it to TP1 or exit 1. Whereas TP2 is always 30 pips, meaning if you take it to TP2, it's a 1-to-2 risk to reward. Okay, so golden era, super simple. Your risk on that should be easy to calculate. It's always 15 pips. Now, if I come over though to trend wave is different. Okay, and trend wave is even different on different time frames. Okay, so this is where you actually would need to figure it out. Okay, so let's look at this one. Now, one thing I will say about trend wave, okay, is TP1. I mean, you can physically see TP1 is a lot smaller than the stop loss, right? So when I'm using trend wave, I tend to always go for TP2 because TP2 and the stop loss are more of a 1-to-1. Okay, but let's say the entry here, it's quite small. And if there's decimals like this, 47793, like just ignore those and look at like just the first bit, right? So the entry is 30,000, or sorry, 3,038. Okay. And TP1 is 3,041. So how many pips is TP1? Right? 38 and 41, if I were to minus it and add a 0. How many pips is TP1?
30.
Excellent. 30. Okay. Whereas my stop loss, okay, this is actually quite a big stop loss, which is why you kind of want to change your time frame sometimes, right? 3038, but then the SL is 3029, right? So 38 minus 29 and add your 0.
110.
There you go, 110, right?
Can I ask what time frame that is?
Yeah, of
I'm
course you can.
curious.
So see up here, it's the 5 minute, which is a bit strange because that's quite a small time frame. So what I would do in this instant, right? What I would do, I would look on the different time frames for a better risk to reward. Okay, this is the good part about trend wave is that on different time frames, it could be looking at different things. So, this one would have been a, oops, let me just scroll down here. Where the heck's the SL? Okay, it's down here. Okay, now this one, I mean, this trade is already in progress, right? It called the long here, okay, meaning long means buy, short means sell. Okay, long means buy, short means sell. Okay, so it called a long here with the entry. Okay, so if you would have entered around that price, it would have hovered there for a while. And now it's up at, TP3. Okay, so obviously I can't take that one. So let me go. I would go to another time frame. Let me go to the 1 hour. Okay, that one's also already just, hit TP5. That one's, I don't know what's that one's sometimes oh my. What's happening here? I guess it's hovered in that area for a long time. Okay. Right. So this is a much better, okay, this is a much better one. Okay. 3035 to 3037. So that's a 20 pip SL. Now, remember, I said to you, I often go to TP2 or TP3. Okay, if it was TP3, that's 3035 to 3033 is 20 pips. So that would be my 1-to-1. This is why it's important for you to know how to calculate these things. Okay, so you want to kind of look. So trend wave, don't just like take the first one you see. Have a look through the different time frames. Okay, see which one has maybe the better risk to reward. Okay, but golden era, okay, I would say start by mastering it first because it's the risk to reward there. You know what it's going to be every single time until you feel a bit more confident. Okay, I would say definitely use trend waves because, the TP5, you're looking at like a 1-to-3 risk to reward, right? And it does hit a lot of TP5s, right? Yeah, Which one you don't like trend wave? I like trend wave. I like it. I like it. Okay, so just while I'm quickly my last bit, okay, compound calculator, but just while I'm quickly here, because we had a couple people ask in the chats today, I do go through the scanners on my onboarding call. Okay, so there is an onboarding call tomorrow at 8 p.m. So if you just joined today, okay, try and be free to oh no, tomorrow's Finley's. Okay, no, tomorrow I do the onboarding call at 9 p.m. Okay, 9 p.m. But try and get on that call because I go through like the whole everything like your live sessions, how to use the scanners, etc. But just while I'm here, okay, just a couple little tips with the scanner. Number one, I mean, I just showed you because somebody asked, which is really good, how to change your time frames, which is up here. Okay, very, very simple. Okay, you can see 1 minute, 30 minute, 1 hour, 4 hour, 5 minute. Okay, over here on the right hand side, well, you saw when I was on the 1 minute, I opened it up and it looked like that, right? Golden era always opens up and looks like that. So over on the right hand side, you just click the price and drag. Click and drag, click and drag, click and drag. You're just zooming in. That's all you're doing. You're zooming in. Now, if you want to see this full screen, you just click this little square up here on the right, and voila, you're now full screen. If you need to stretch things out, like if you want to be able to see this a little bit better, you just at the same thing at the bottom, see how I'm stretching the time? Look at that's if I want to maybe look back at the overall trend. Okay, clearly gold has been in an uptrend very clearly. You can physically see it moving up the page. Okay, creating higher highs, lower lows. Okay, lower, you know what I mean. Okay, and just one more bit over here on the right-hand side is where you can actually change what it is you want to trade. So the euro symbol is your Forex pairs. Okay, your different currency pairs here. Okay, the oil is your commodities and your metals. So you've got oil, you've got gold. Okay, gold is like the default pair, right? Every time you open, you see XAU USD. Okay, Bitcoin, okay, is your cryptos. Okay, as a beginner, I would, you can trade Bitcoin, but I wouldn't be trying to do all these other pairs. Okay, and then you've got I is indices, US 30, NAS, etc. Okay, now let me go to the last thing. Okay, last thing on our checklist. So again, beginning of the week, you look at the news, then you look at your risk for the week. So why I'm saying that is, let's say your first week, you've grown your account by $100. Okay, you've gone from $500 to $600. Well, now coming into the new trading week, well, that might mean you can move your lot size up when you're using golden era. Rather than a 0.01, maybe your risk is going to allow you to move that up to a 0.02. Obviously, the bigger you grow your account, you can make your lot sizes bigger because, of course, you want to be making more profit, right? As your account size gets bigger, you'll be able to move that up, right? Because a 0.01, you don't want to be taking 0.01 if there's $10,000 in your account, you're only going to be making like a couple dollars a trade, right? If you got $10,000 and you're risking 1% per trade, well, you've got the space to lose $100. Right? But that also means you're going to profit like $200, $300. Okay, so have a look at your account size, readjust your lot sizes. Now, why I say for the week, I would stick to whatever you are at the beginning of the week. I would stick to that same lot size the whole week so you have consistency. Consistency. Then when you start a new trading week, if your account has grown, you can look to change. And again, keep that consistency the whole week. So on and so forth. If your account is smaller, you might have to stick to 0.01 for a few weeks to build up your account, and that's okay. Right. Last thing you need to do is you need to revisit your goals and your trading plan. You should have a trading plan. Okay. And every single one of you, if you don't, I want you to do this after the call. You probably don't if you're new, right? And I'm just going to drop this in here. Now, trading plans can look different depending on your goals. I know some people, right, depending on their account size, but let's say they put $1,000 in their account, their goal is to make $50 a day, and then they withdraw every Friday, or to make $50 a day, and then at the end of the month, they withdraw half their profits, so that way they can compound. That's one way of doing it, having a set dollar amount goal per day. Now, the only thing with that, make it realistic to your account size. You can't like have $200 in your account and your goal be to make $50 a day, right? That's like I'm really bad at math, but like 25% growth, which is a lot. Can you do it? Yes. But is that teaching you good habits? No. Right. So, what I would suggest you do is have a compound interest calculator because it encourages you to practice good habits right from the beginning, even if the amount is small. Right. So, let's say you've got $500, pounds, euros, doesn't matter, in your trading account. Okay. And your goal, I would say 2 to 3% as a beginner is a very, very reasonable target. Okay. So, let's say 2%. I'm going to do this super quick because I'm actually hosting the 9 o'clock team call. Okay, so 2%, and do this for your first 90 days. That's 3 months. Okay, if you can do this for the first 90 days, your daily reinvest is going to be 100. That means if you don't do a withdrawal. Should you do a withdrawal in that time? Yes, absolutely, because you want to see that this works. Okay, but compound interest is the eighth wonder of the world. So for the most part, you want to keep some of your profits in there so you can compound. Okay, we're not going to include weekends, although we can trade Bitcoin on the weekend and we're going to calculate. So that $500, just 2% per day in 90 days will turn into almost $3,000. Right? And a lot of people think, well, okay, the first couple of days, some people aren't satisfied because 2% of 500 is only $10. And then the second day, it's only $10.20, then $10.40. Okay. That doesn't seem satisfying to some people because $10 seems like a small amount. But if you stick with it just for those 90 days, well, by the end of the 90 days, look at you're up to almost $60 a day. And if that carries on, that's just going to get bigger and bigger and bigger. Right. But what I would suggest you do with this is print it out or copy and paste it onto a spreadsheet. Okay. And if you do that, I would get rid of some of these columns like this one, principal cash in, cash out. I would remove that. Okay. And where it says total cash, obviously get rid of the zeros and each day track exactly how much you made. If your goal is 2%, but you've made 3%, amazing. Stop trading for the day because you've made your percentage. Guys, I know in the chats, some people, you see some people making $100, $500 in a day, even $50 in a day, but maybe you're here and you've made $5. Okay. Don't compare your results to their results. Okay. Because at the end of the day, trading is all about being disciplined. If you can be disciplined now and just repeat these same daily habits every day, right? I mean, it's the same with anything in your life, right? Obviously, if you're somebody who goes to the gym, if you're a gym buff, you know that going to the gym 4 or 5 times a week, repeating that, having that habit, you're going to feel a lot healthier in 3 months, 6 months, a year, because you're repeating that same process. Okay. Trading is the same. So whatever it takes for you to be disciplined, it might be you need to print this out and you need to stick it somewhere, because if you feel yourself getting a bit greedy and you're wanting to take more trades, but you've already hit your, profit for the day, this hopefully will keep you accountable and revisit this. So every week, look back. Okay, how did I do last week? What are my goals for this week? Okay, keep reminding yourself of these things. Okay. And what I would say if I had time is then to set some big goals in the next 3 months, 6 months, a year. What do you want your trading account to be? Play around with that compound calculator and look with that same $500. If you did that for 6 months, look at how much money you could make. Right? If you're saving up for a down payment for a house, you want a new car, whatever. Okay. Look at some of those big goals that you have. Okay, so guys, I do need to go because I'm supposed to be starting another call right now. So I'm going to jump off really quickly. Okay, I will post the recording into the group chat once I've had time to put it on my YouTube. Okay, guys, take care. Have a fantastic evening. Bye.